All right, so I'm only watching 10 names this week. Real quick, general summary of this week. It's another loaded week as far as earnings go. I think last week it was like 440 or so companies reported earnings in total. A vast majority of that was like S&P 500 companies. There were a few Dow Jones companies like Caterpillar reported, and half of Fangman reported. Netflix, Apple, Microsoft. Well, Netflix reported 2 Fridays ago. My bad. This week, a lot of eyes are on semiconductors and e-commerce. Amazon reports this week. AMD reports this week. Shopify, I believe, reports this week. So I cannot confirm off the top of my head. And there's 1 or 2 more big tech companies that are just slipping my mind right now. But this week is more focused on tech. Okay, whether it's communication services, whether it's Facebook and like social media companies, and then we have e-commerce as well with Amazon. Okay, so primarily this week, that's the sectors that I'm watching. I have 1 energy name on my watch list. I'm watching SPY and TripleQs, but in total, looking at my journal here real quick, I'm watching 10 stocks this week, and that's it. So first things first, I'm going to break down SPY and TripleQs, and then I'm going to jump into some comparables for 2018, because I really do believe that the downside is not done. I think futures, last I checked, was like 15 minutes ago. I'm not trading them tonight, but I think the last time I checked, they were like break even, flat, or small green by a few ticks. So there is some buying pressure showing up as the night goes on. They were down just a little bit. I think ES was down 13.5 points was the lowest that I saw. So it's not really anything big red. 4,440 wasn't lost. So that's not a big deal either there. So buying pressure is there in the futures markets so far. But jumping into SPY real quick, in my opinion, now, call me biased. People were calling me biased yesterday and last night on StockTwits and all this good stuff. This bear flag is still intact as far as I'm concerned. Okay, there's a lot of people that think the bottom is in. Okay, we very well could gap up tomorrow. And all that has to happen for this bear flag right here for SPY that I'm showing you to be invalidated, and it's no longer valid in my eyes, is a 4-hour candle closes above 444. Once bulls give us that close, this bear flag is done. But look where price closed. It closed right into resistance. Okay, now if you're bullish and you swung calls, that's exactly what you want to see. Price runs it up into close, right into resistance. You have volume. That's the kind of bullish close that you want to get. But the bear flag was still there. Price closed inside the bull flag. Price gaps up and holds above 444 tomorrow. Bear flag's done and invalidated. Now, if price fades into it again, the second half of the day tomorrow, then that's a remain to be seen. But as far as I'm concerned, a 4-hour candle closing above 444 tomorrow for SPY invalidates the bear flag setup. And I think we see a little bit of a rally. Personally, I think bulls are targeting 448 as their first price target. That's going to be the first target. If they can break above 448, I think they're going to really try and print 450. 450 would be a really big psych level for SPY to print. If and when SPY prints 450, it could be tomorrow. It could be on Tuesday, probably Tuesday at the latest. If bulls remain in control, price is going to print 450. Okay. We've seen the moves that SPY has made the last 2 to 3 weeks. Okay. SPY closed at 442.74. It's not out of the realm of possibility for 450 to print tomorrow, let alone by Tuesday at the latest. I really think we get a test by Tuesday at the latest, so long as buyers get a 4-hour candle to close above 444. When 450 is printed, watch the volume bar if it comes during the trading day. Now, if it happens in pre-market and price opens above it, say Tuesday morning, then I'm a little bit of SOL. We have to adjust accordingly. Intraday, if they print 450 for SPY, watch the volume that comes in. If buyers are there, volume is going to light up because algos and market makers are going to get their limit orders filled at that huge level. Watch the same thing to happen at 445 and 448. But most importantly, from 448, watch 450. If the bottom is in for now, buyers are going to be targeting 450 as the first big psych level. Okay, volume has to come in. If you see volume come in and it's matched with a bullish candlestick, it has to be matched with a bullish candlestick, preferably on the 5-minute time frame. If it comes in the middle of the day, Watch 15-minute time frame as well, or even the 30-minute and hourly time frame. But that's if it comes in like around lunchtime into the afternoon. If it comes in, I would say between 9:30 and 11 a.m., watch the 5-minute time frame. Watch the 5-minute candle that comes at 450. If it's a small candle with low volume, guess what? There was no limit orders waiting to be filled. That could be the top. In the very immediate shorter term, I would expect a pullback by at least $1 because no market makers were there to buy price. If nobody's buying price at 450, guess what? People are going to sell it for profit. When people sell, stock goes down. It's very simple. Okay. If they rally at 450 and keep pushing, 454 is up next as the big key psych level. Okay. Bear flag is still intact. If we gap down tomorrow, because we have no idea what's going to happen right now into tomorrow morning. If we gap down tomorrow, guess what? A whole lot of people are going to be pissed. This bear flag is still in play. If price gaps down tomorrow and stays below and is still in this bull flag, or excuse me, bear flag, and price is still below 444, bear flag is still in play. Buyers have to hold 436. If bears get priced below 436, they're going to push price back down to 432. Notice where this support trend line of the bear flag keeps going up. 432 is the key level. If they can get a 4-hour candle to close below this support trend line or below 432, we immediately go to the low right here of Friday, which is 426. If 426 breaks, we're going back to 422 followed by 420. If 420 breaks this week, short everything. There is no strong support between 420 and 410. If 410 breaks, it's going to be 405, and if 405 breaks, 403. The more and more we keep moving down, the closer price gets to a very, very big gap on the daily time frame. It's like a $3 or $4 gap on SPY. When SPY gapped up from like 399 or 400 and change all the way up to 403, 404. That is a monster of a gap on the daily time frame for SPY. Gaps will be filled on SPY. I just can't tell you when. If price moves down this week, the closer it gets to that gap fill, it's going to act as a magnet for price. The closer price gets to that magnet, the weaker buyers are going to get. Okay. Real quick. All right. Now I'm going to break it out bigger because I'm looking at my notes as I'm talking. There's one resistance trend line I'm watching for SPY. Okay. There's a whole lot of support trend lines we can draw, but a lot of them are kind of busted in my opinion. Okay. Buyers held the key support level at 420. There's one resistance trend line that I'm watching for SPY, and it's on the daily time frame. This doesn't happen though unless we get a really big rally. There is this one resistance line right here that I'm drawing for SPY. We've got 1 touch, 2 touches, arguably 3 touches right here. It's never been tested again. If SPY is going to rally, we can expect a test of this around 454 to 456, maybe 457, depending how sharp of a rally it is. Okay. Watch for price to react to this trend line. It's only been tested twice, maybe 3 times, if you want to count either of these 2 daily candles. Okay. I would expect on the first test a rejection. I really would, just because it makes sense from a technical point of view. Okay. If you're going to rally into this and there's no pullback between Friday and a push into this resistance trend line, yeah, a pullback makes sense and a rejection because people are taking profits. Okay. Don't think for 1 second market makers don't see this, and retail sees it. Okay. If I see it, dozens, hundreds, thousands of other retail traders are going to see it, let alone people on Wall Street. This is nothing new. Let me take you back to the bloody September. Okay, for once, September actually played out to how it's supposed to historically. If we want to draw this trend line right here, and it's going to be a little ugly real quick for SPY as I get it orchestrated right. Okay. This was a bloody month of September for the markets, mostly because of China news and news coming out of China, but it acted as a good technical pullback for our markets. Okay, and that's the headline they attached to it to get that technical pullback in. Look what happens. A bottom is found. Then there's a relief rally. Look what happens when price gets close to this resistance trend line. It gaps down again. Now look on another retest, specifically October 7th. Look how price reacts. It's rejected overall like bearish daily candle. And price moves lower for the rest of that week, it looks like, until a strong bottom is found and price is now finally putting in higher lows. The first test of this trend line, and now look how long it took to be tested. Okay, October 7th is when it was tested for the first time. This trend line wasn't tested previously since September 9th into September 10th. Okay, this is my reasoning for expect the first test of this trend line to be a rejection, and I'm looking to go short when that opportunity comes. Okay, buyer or bulls had the relief rally into that trend line. The first test, sellers were there waiting, people sold for profit from a short relief rally, and price moved lower again. It makes sense from a technical point of view for the same exact thing to happen. Now, I might be completely wrong. We could get the mother of all daily candles to blow right through that, and we're on our merry way to 460. It remains to be seen, but that is a high probability short setup in the making. Just wait for it. If you don't feel comfortable going long yet and you want to look for the short setup, there's one for you. Now I want to show you weekly. This is big. Okay, Friday afternoon, I was kind of shocked. I sold puts for break even when they were up nicely. I broke one of my golden rules. It is what it is. I finished Friday red. I took the day off Friday night, came back Saturday, and started looking at charts again, and then I finished up everything today. This volume bar for SPY, the largest volume bar SPY has seen since the bottom was found in March of 2020. Overall, it is a bullish weekly candle. Overall, I mean, I'm not going to argue against that. It's a bullish weekly candle. I will zoom back in. But look at this weekly volume bar right here. 920 million shares traded last week for SPY. The largest volume bar that SPY has given us since I would say March 23rd of 2020. If this is the bottom of this correction, and SPY did hit correction levels, this makes sense strictly looking at it from this weekly volume bar. That is a massive, massive, massive volume bar. And I'm not going to be biased against that. Do I have a short bias? Yes, I kind of do. But price action is going to dictate everything that I do. Fundamentally, I'm bearish. That's why I'm saying I have a short bias. But from a technical point of view, that is a mother of all weekly volume bars that I cannot ignore, and nobody should be ignoring. Okay? Now, finally, I need to show you the monthly time frame. The bigger the time frame, the more dominant it is. A lot of people forget to look at the monthly time frames because a lot of people don't think it's important. Well, it is important. I used to be in that boat. I used to think it wasn't important up until probably a year and a half ago. Okay? Unless we get the mother of all rallies tomorrow out of the S&P 500, SPY is going to print a bearish engulfing candle at all-time highs on the monthly time frame. Keep in mind how big of a time frame that is. The monthly time frame. You don't get bigger than the monthly time frame unless you're looking at quarterly or yearly charts. Okay, and as far as I know, not a lot of traders do that. Quarterly, I hear like once in a blue moon. Okay, unless SPY closes above roughly 461 tomorrow. Keep in mind, SPY closed at 442. So we're looking at a $20 jump between closing price on Friday and the closing bell tomorrow. It's extremely unlikely, but never impossible. SPY is going to print a bearish engulfing candle at all-time highs with the volume bar to match. Look at this volume bar. It eclipses the month of December. That's a high probability short setup. However, I want to show you something. Nothing is ever 100% certain in the markets. Trading through price action, technical analysis, level 2, fundamental investors looking at conference calls and earnings numbers. Nothing is ever 100% in the markets. Look what the month of September printed. A monthly bearish engulfing candle at all-time highs at that point in time with the volume bar to match. This volume bar for the month of September eclipsed the one of August. That's a high probability short setup. If you went short into the month of October, seeing that, I cannot fault you for that line of thinking. But it is not the end all be all. The market is going to do what it wants, and we have to react accordingly. So more than likely, SPY is going to print a bearish monthly engulfing candle tomorrow. That tees up a bearish February and March because engulfing candles tend to play out the following 1 to 3 candles. So if we're looking at it on the monthly time frame, we're now looking at the following 1 to 3 months. So that puts February, March, and April all in play. Bearish engulfing at the monthly time frame, that tees up a potentially bearish February at the very least. But as we've seen in recent history, that doesn't always play out. The month of October led to new all-time highs. Okay, this is something to watch. Now, I'm going to jump into TripleQs. I'm going to work my way backwards. Real quick, compare SPY's monthly candle, and I have drawings. Well, let me flip real quick to a different chart. Oh, just kidding. I have lines drawn on both. I thought I didn't. All right, here's SPY's monthly candle for the month of January. Closes tomorrow. Analyze this monthly candle carefully, excuse me. And now look at triple Qs. There is a very stark difference between SPY's monthly candle and triple Qs. Now I'm talking about this, and yes, the monthly candles have not closed yet. ES can run 100 points tomorrow, and SPY is still going to print a bearish engulfing candle. NQ can run 400 points tomorrow in the positive, and triple Qs is still going to print a bearish engulfing candle for the month of January. This is a very, very large bearish engulfing candle as of closing price on Friday. Tomorrow's the last day of the month. This is much uglier. I'm very bearish on the triple Qs fundamentally for this year because of raising rates. That's fundamentally bad for big tech. SPY, not so much. I've been neutral to bearish in my own analysis since the beginning of the year. Triple Qs, I'm bearish. This is a very, very large candle to print for the monthly time frame. There's quite honestly very little to be bullish about. Now, the one thing that bulls can cling to for these two candles is the lower wicks. Buying pressure showed up, but we know when buying pressure showed up. It showed up Friday, like at 2 p.m. So there's been a solid 2 hours through the entire month of January of really, really strong buying pressure. They made a very, very big move on Friday in a short amount of time. When that usually happens, the following 1 to 2 trading days tend to be choppy because they made such a long move. Buyers and sellers are kind of tired. They are stretched to their limits a little bit, quote unquote, as far as buying power goes. There will be some selling. There will be some profit taking. Sellers will get their moves here and there. I would not rule out a choppy Monday. Monday's the last day of the month. Be mindful, it could happen. We could also see a really strong rally because of how strong the rally was on Friday. But at some point, if buyers are going to start a relief rally, they're going to get exhausted. And when they get exhausted, that's going to tee up the bears' next move. I'm going to get into that a little bit later. All right, so now I'm going to work my way backwards here a little bit. And I'm going to start working down triple Qs to the weekly time frame. And I'm going to have to really, really zoom out for this one. All right, and I'm going to keep zooming. I'm going to hide my chat box real quick. Triple Qs, let me see if I can't do it like this. Triple Qs, let me bring back my chat box. Triple Qs volume bar. Okay, I really had to stretch this thing out so I could see this and get this in good enough view for everyone. This is not the largest volume bar that the triple Qs have seen. Okay, this volume bar all the way back from August of 2011 in the week of, or in the month of August, there was a 1 week stretch in the month of August from 2011 where there was a bigger volume bar than the one we got last week from the triple Qs. Okay, but since that point in time, this is the largest volume bar the triple Qs have seen. That is something to take note. This has been more than 10 years that we've seen so much volume come into the triple Qs. All right, now I'm going to go back out real quick. Lock everything back in, bring back my chat box. All right, so overall, again, a fairly overall bullish weekly candle for triple Qs, but it's got some selling pressure shown in the top of that wick. All right, let's compare to SPY's again. SPY's weekly candle, if you look at it, that's a very small lower or upper wick, excuse me. There's not really a whole lot of selling pressure in that weekly candle. In the triple Qs, yeah, there's a little bit more selling pressure that's noticeable, but overall, compared the upper wick to the bottom wick, I mean, that's what, 2 to 3 upper wicks make up the bottom wick. So there's still a lot of buying pressure shown. Very nice volume bar to match. Now we start getting into big psych levels for the triple Qs as far as price targets go, because I'm trying to get away from fibs from a personal standpoint. So I'm not going to break them out tonight. I'll show them tomorrow morning for everyone in my team. Okay. But as far as the weekly time frame goes, that's kind of it up until I would say 380. If this is the bottom for triple Qs, it makes sense just from a strict technical point of view. And I'm going to get into the numbers just after I wrap up talking about the triple Qs. From the daily time frame, there's nothing that really sticks out to me as far as the daily time frame goes. I'm going to jump right into it on the 4-hour time frame. Just like SPY, triple Qs is still showing a 4-hour bear flag. Here's the key for bulls. close a 4-hour candle above 356. Look at this rejection at 356 on Wednesday. Coincidentally, FOMC, SPY rejects at 444, and then 5-10 minutes later, it rejects at 443. Bulls for triple Qs. You want to see a 4-hour candle close above 356. When that happens, it's going to be an easy $4 sprint to 360. If bulls can reclaim and hold 360, they can really start running price up until 372. 372 is the next area of value on the 4-hour time frame for triple Qs. As you can see right here, there was a lot of distribution at this area on the chart, and then we see the big move down that price made. If 360 is reclaimed, that really does tee up an $8 to $10 to $12 move before I would think buyers start to see some exhaustion, and they start to fizzle out a little bit. Okay, this could be a really, really big move for the triple Qs. Here's the curveball. It's tech earnings week. This 2-week stretch isn't as bad as it's been in the past. There's been weeks where literally every single FANGman company reports in the same Monday through Friday. This time it's spaced out 2 to 3 weeks, I believe, but we've still got some triple Qs giants. We've got Amazon and we've got Facebook. I think Shopify, AMD also probably waited. And I don't know when NVIDIA reports. If anybody knows when NVIDIA reports, that would be greatly appreciated. If you could let me know in the chat box, because that's the semiconductor giant. That sets up that entire sector as well. AMD being the number 2 name, that also sets up semiconductors as well. Really dumb question. No dumb questions. But a green volume bar means there are more buyers are in that volume bar than sellers. Yes, but my volume bars are matched with the candles. So if it's a green candle, it's going to be a green volume bar. Red candle, it's going to be matched it's going to be a red volume bar. But yes, you are correct. Sellers, if the candle's green, then that means buyers overpowered sellers and they were more present than sellers. But yes, they are color matched as well. February 16th, so that's 2 weeks away. QCOM doesn't report this week, I don't think. MU might report this week as well. So semiconductor earnings are kind of spread out. That's also a pleasant surprise compared to previous earnings seasons. But AMD is on watch as far as semiconductors go. This is a big week for the triple Qs. It takes one FANGman stock to sink the Nasdaq. It takes just one. I said Netflix is going to tee up all of FANGman. Netflix really shit the bed on earnings. It's bad. No one's talking about it quietly. Jim Cramer shouldn't even have a job. Netflix really shit the bed on earnings. I have Facebook's Q3 earnings conference call up because I told my team and I told StockTwits, I'm bearish on Facebook. They also shit the bed Q3 on earnings. I'm really, really interested to see what they do Q4 because the iOS changes that Apple made fucked up a lot of companies. And I think, as far as I know, Pinterest is the only social media company that has been able to maneuver around it well. Snapchat, Facebook, and Twitter are all really, really up shit's creek as far as adapting with these iOS changes that Apple made. And Facebook is in the worst position of all, but I'm going to cover that in my bearish short report coming out later tonight. And yes, exactly. Amazon will affect SPY as well. Amazon's another one. That's basically the e-commerce giant aside from Shopify. Here's the fun fact. There's a lot of people that picked Amazon as the stock of the year. I'm going to show Amazon's monthly chart. This is dead money. You really have to start wondering, why are you an investor in Amazon when it's been range bound ever since it rallied back from COVID? Everybody's predicting 4,000. Fundamentally, this is a bearish year for tech stocks. Raising rates, that's never ever good news for high valuation and high growth tech stocks. That's what Amazon is. Amazon guided down last quarter. Nobody talked about that. Q3 reports have been out. And what does everyone do? The last week of December, they upgrade Amazon. They say it's the stock of the year. It's the top 6 stocks of the year. I think BOFA said it was 1 of 6 or whatever it was. They also threw in my Boeing in there as well. Boeing kind of shit the bed big time on earnings reports. Wasn't terrible, but it wasn't good either. Amazon guided down. Why do you guide up a company as an analyst when the CEO specifically tells you they are guiding down? Makes no sense fundamentally. But I think analysts are the biggest boobs out there. I don't think Jim Cramer should have a job, but it is what it is. I'm kind of getting off track now. getting into the triple Q's bear flag again. Bulls want to see 356 first. If price opens in this bear flag tomorrow, I think it's really bad news for bulls as a whole. I really do, because they had the bullish close that they needed for SPY and the triple Qs. If price opens in this bear flag tomorrow, 356 is the level to watch. If price prints 356 in the morning, tomorrow morning, gaps below it, whatever it is, watch the 5-minute candle and volume that comes at that level. There has to be limit orders waiting to be filled. If there is no limit orders waiting to be filled, no algos ready to flip one at 356, price is going to fade easily $1, maybe even $2 to $3. Okay, watch for that easy short opportunity if it comes. Triple Qs, I would think, print 356 tomorrow if the bulls are there. Maybe they gap above it. Futures trading, I don't know what futures are doing right now. 15 minutes before I started this Zoom meeting, they were flat. They were either green or flat. I don't think a single one was red. Bulls cannot give up 340. That is the big psych level. They cannot give up. If 340 breaks, more than likely this bear flag is going to execute, and we are flushing down. We're probably going to hit 332 as the first one, followed by 328, 324, and last but not least, 320. All right. That is all I wanted to say for SPY and triple Qs. As far as Friday's close and all that good stuff. The 0.5% rate hikes or full point rate hikes might help this reversal too. What's the guy's name that said it Saturday? Bostic, I think, is the Fed guy's name. He doesn't matter much. The only Fed members that matter is Powell, obviously, because he's the Fed pres, and then VP Bullard. I believe that's her name. Biden. She was already a Fed member, but Biden nominated her to be VP. He renominated Powell. They're both 5-year terms. The idea is if Biden wins re-election, he then gets to nominate the next Fed president because they serve 5-year terms. Powell is let go, or Powell opts to retire on his own, and then Bullard steps in to be the president of the Fed. That is the idea, or that is the line of thinking amongst President Biden and everyone in his inner circle. Okay, Bullard matters now. She didn't matter 2 years ago. She didn't matter a year ago when she wasn't VP. She now matters. Bostic, he doesn't really matter. He's the one that said 0.5 point rate hikes are possible. He doesn't matter. Futures didn't really gap down the way that I was thinking maybe they could if they really cared about his remarks. If Bullard or Powell say 0.5 point rate hikes are possible, Powell most of all because he is the Fed president. Bullard matters, but not as much because she's not president yet. If either of them say, more so Powell than Bullard, 0.5 point rate hikes are possible, short everything. I cannot stress that enough. The market is going to hate that. That is a total relapse of 2018. I'm going to show you 2018 here very shortly. That is a total relapse of 2018. Short everything. The market's going to crater when those words are uttered. Powell didn't say it last week, and that's going to lead me into my bullish thesis for where I think the market can go from the next few weeks. So I'm going to start reading off of my notes because this is where I have everything written down. I'm going to compile this into a Word doc either tonight or tomorrow, and then I'm going to get it published, everything. If more so Powell, possibly Bullard, I don't know how the market's going to react to Bullard because before she was Fed VP, specifically while President Trump was still president, she would say a lot of things that the market traditionally wouldn't like. But Powell would come in and he would put the brakes on it because she didn't matter back then. She wasn't VP and she wasn't president when like Powell was. She's now VP. If she says 0.5 point rate hikes, she mattered. Her word matters now more so than it did 3 years ago, even 2 years ago, and then a year ago. There's a very strong possibility the market reacts very negatively if she says that. If Powell says 0.5% rate hikes, guaranteed short everything. I can guarantee that. Bullard, I don't know. I'm leaning 75% chance short everything. The market's going to react very negatively. But I just don't know because she is the VP. She doesn't have as much weight behind her name just yet as Powell does. Powell is still top dog for the next 4 years and like 10 months. Okay, so TripleQ's closing price on Friday. I have notes written down. It is down 18 0.25% from recent all-time highs. Now, these are all rough estimates. Okay, I can be off like 1% or 2%. So don't shoot me if you do the same measurement as I did and you find a different number. These are very relative. Like, give me plus or minus like 1.5%. Okay, we're looking at an 18% correction from all-time highs. SPY 12.5% to 12.25% correction from all-time highs. When something hits 10 to 20 or 10 to 19% down from all-time highs, that is considered a correction. Markets can enter a correction. Individual stocks or sectors can hit a correction, as well as commodities. Okay, commodities such as oil, gold, silver, they can all correct themselves. Okay, now if that happens, there's going to be fundamental reasons behind it, more so not technical. Technical is what we're seeing right now, but it's also based on fear because of the Fed raising rates. Powell kind of cooled the brakes a little bit temporarily. All right, if anything ever gets to 20% down or more from recent all-time highs, that is bear market territory. The Nasdaq is really flirting with it. They hit a low of 18.25%. That's a really big correction, but it's not bear market territory. They're flirting with it. This is a big week for the Nasdaq. Okay, Nasdaq goes back down to the lows it saw on Monday of last week. We really might be looking at bear market territory officially for the Nasdaq. Okay, now I see two things happening. All right, the bullish thesis that might play out. This is my bullish thesis. Okay, if this is the bottom, Friday's close indicated that was the bottom. That's great. A lot of people are calling for it. I'm fine either way. I had all cash over the weekend for a reason. If the bottom is in, this was a healthy correction that sets up the market to rally until the middle of March. There's a very specific reason I say the middle of March. The next FOMC meeting is on March 15th and March 16th. The way FOMC meetings work is there are a 2-day meeting. The FOMC statement comes out with Powell's press conference 30 minutes later on the second day. FOMC for January started on Tuesday. FOMC was released on Wednesday, releasing their notes, what their guidance or basically what their plan is, blah, 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 all that good stuff. Comes out at 2 p.m. Powell talks exactly half a minute later. The same thing is going to happen in March. March 15th is the start day of their meeting. 16th is when the data rolls in. If this is the bottom, it really does tee up the market to rally up until then. Now, there's going to be some bumps in the road. In between now and the middle of March, when the next FOMC meeting is, Powell is more than likely going to talk. He might go to some college and university to talk about climate change and how bad the government is at spending money, because he likes to do that in a very shy way. Or he could go on CNBC, Fox Business, whatever. Or he could do a press conference. I don't know if he has a press conference state or scheduled in yet. I don't know. I haven't looked yet. More than likely, Powell is going to talk again between tomorrow and the next FOMC statement that he gives. I can almost guarantee it. Okay. So there is still a possibility that he comes out and says 0.5% rate hikes are possible in between now and March. But if he never says that, so long as CPI doesn't get really, really, really bad and it doesn't miss expectations by 5 miles, this does greenlight the market to potentially rally all the way into March, because there's nothing for them to worry about. Okay. Right now, January FOMC said, and when I say they, I mean bulls in the market. Right now, January FOMC said they're maintaining the 4 rate hikes this year, starting in March at 0.25% each time. That has been priced in. That is old news to the market. That's why we saw that immediate jump up to 444 when the report was released. That's good news. The market's priced that in. The choppy action that we saw afterwards was the market waiting for Powell, because the market knew there was more to come and they needed to hear more. That statement alone didn't seal the deal on anything that anybody was listening to. Of course, Powell says tapering isn't done yet. That was very bearish. Tapering should be done by now. If the Fed was really serious, tapering is done. That's behind us. The market would have ripped off that news. I mean, we would have ripped, and SPY would probably be at 460, arguably. It would probably be 455 to 460 off of that news alone by the end of last week, if they announced tapering was done and the rates remain or were going to be raised 4 times at 25% each. Market would have loved that news. and we would have ripped and we would have been looking at new all-time high targets. Instead, Powell says tapering isn't done yet. It's bad news and honestly kind of stupid that they're going to finish tapering and raise rates. Why do both at the same time? It's fundamentally stupid, and that's why we saw the negative reaction that we did Wednesday all the way into close. Now, I'm kind of shocked at how the market treated it afterwards. The market held above 420 for SPY. TripleQ's held above 332. It looks like, just looking at my rough 4-hour chart estimate. What does tapering mean? Tapering means essentially they're done buying bonds and they're lowering their balance sheet as well. Okay. They're going to stop buying bonds. When they bought bonds, it made the stock market look more attractive to investors. The Fed buying bonds makes bonds non-attractive to investors. Nobody wants to buy bonds. Well, if they're not buying bonds, it means they're going to be buying stocks. Okay. If the Fed was to start buying stocks, well, now bonds suddenly start becoming very appealing to investors. That's kind of the trade-off of either one, and that's how that works. Okay. Now, moving on to my bear thesis. Okay. My bull thesis is that if this is the bottom, we really do rip all the way into the middle of the March. And that means more than likely SPY 500, to be honest. TripleQs, I don't what's TripleQs? I would say TripleQs maybe 440, 450 maybe on TripleQs if we rip, if this is the bottom. But that's also contingent on earnings. Amazon got it down. Facebook, disastrous earnings report. Okay, let's see what Shopify does. Let's see what the semiconductor giants do. That's also contingent on those companies have positive earnings reports. Amazon or Facebook shit the bed, Nasdaq is toast. Apple and Microsoft won't be able to hold up the market forever. Netflix was one that already shit the bed. Fangman isn't done yet. Okay, so if this is nothing more than a pull up before a bigger move down, now I'm getting into my bearish thesis, by the way. If this is nothing more than a pull up before a bigger move down, I believe the indexes will match their percent lows from 2018 at a minimum, and I'm about to get into that. TripleQs down, or actually let me flip real quick. So SPY, the 2018 lows in 2018, and actually before I start talking about this, I need to put this in reference for everybody so you know what I'm talking about, because I was trading back then. I know not everyone was trading back in 2018. Where am I? Should be coming close. There's 2020. There we go. Here we go. This is that shit show. All right. This is the last time. This is how the markets are going to react very negatively if the Fed starts getting ahead of themselves and raising rates at 0.5%. If the Fed starts raising rates at 0.5% or more, like God help the market if they really start going above 50%. If I'll say this right now, the Fed raises rates higher than 50%, we're going to see a limit down. I told a lot of my mentorship groups we would probably never see a limit down for another generation. That is the one golden ticket that can punch a limit down, is if the Fed starts raising rates by more than 0.5%. If they raise it by 0.5%, maybe we hit one limit down, maybe, just because Wall Street's going to want to punish the Fed and hurt retail. If they raise it by more than 0.5%, I can guarantee with 90 to 95% certainty, we will see a limit down. And I told a lot of people we probably wouldn't see a limit down for a generation. I never thought the Fed would be this reckless with battling inflation. Okay, and I'm gonna get into that a little bit later. Okay, so this is TripleQs. This is the last time when the Fed started raising rates aggressively. There were some other stuff that went into this sell-off as well. But most importantly, it was the Fed raising rates in a very aggressive manner. 2018 was kind of the benchmark of a really good, healthy bull market under quote unquote normal economic times. January through September, 9 months, very, very strong bull market, made all-time highs, ripped to all-time highs in all three indexes. October rolls around, Fed starts raising rates. That's what we see right here. In a 3-month time span from October to December, the market erased every single gain it made in 2018. A lot of people were really pissed. A lot of people's 401ks looked like shit by the time 2018 rolled around and they got their statements in for the end of the year balance. Okay. A lot of people were calling for Powell's head at that point in time, and the Fed backed off. The Fed caved into public outrage and pressure from President Trump, I believe at the time, as well as members of Congress and the media and the general public, the Fed backed off. They stopped being aggressive, and look at how the market responded. The market started roaring right back. Okay. If the Fed gets aggressive again and they get ballsy, this is what we're going to see. The kicker is, I don't think they're going to cave this time. I really don't. They caved in 2018, and that's why you see such a sharp rally back, because the Fed backed off and they changed their tune and they switched back to a lower rate raise. I don't think the Fed is going to cave in this time. I really don't. Nothing is telling me that the Fed is going to cave in. Okay. In 2018, from its all-time high, I'm going to talk about SPY here now real quick. And let me see. Gotta find SPY real quick. Here we go. Here's SPY. So again, it's still really ugly compared to TripleQ. So again, you get the sharp rally when the Fed caved in, but this is the big downturn that we see when the Fed got really ballsy and started getting aggressive with raising rates. And there were other extenuating circumstances in the market. That wasn't the only thing, but this was the main driving factor. In 2018, SPY and TripleQs actually hit bear market territory. And this is rough estimates. So again, if you do something different and you get 19.5%, don't kill me over it. In 2018, from high to low, SPY hit a 20.5% drop. That's bear market territory. You hit 20%, that's a bear market. TripleQs went all the way to 23.5%. That's more than a bear market. Okay, remember, 20% is that benchmark. Running back through SPY numbers from last week, SPY only hit a 12.25% correction. Okay, if this is really 2018 all over again, which is what I'm starting to think, there's a lot more downturn for this market to print. Now, I personally think if this is 2018 and the Fed gives the bears the catalyst that they need, or maybe this is just a big pull up, you know, a lot of people are targeting 450 for SPY to print the right shoulder of a giant head and shoulders pattern, maybe, or maybe it's just a giant turn or pull up before Wall Street pulls the biggest rug pull of all on retail, not seen since March of 2020. I don't know, but I really do feel like this is 2018. If we match 2018 numbers, say SPY bottoms at 20.5%, that puts SPY from its current all-time high to bottom at a 20.5% drop. That is roughly $381.50. Okay, I've been saying SPY 380, SPY 360. That's a really, really healthy pullback if we print 360. 380 gets the job done by a bot. Okay, if the TripleQs match their 2018 numbers and they give us a 23.5% drop from all-time highs, that is $312.50 roughly. And those are their trading prices. So if SPY prints, it gives us a 20.5% drop from recent all-time high that we saw in the beginning of January, SPY will be trading at $381.50. If TripleQs match their 2018 drop of 23.5%, that's TripleQs trading at $312.50. As an investor, you should be cheering those numbers on. Okay. I mean, this is some interesting stuff that we've got going on here. Okay, that's my bearish thesis. Now, look at the rebound that the market gave Friday. Now, I want you to see what the market has done in the past. This is 2018, and I'm looking at SPY. This is the daily time frame, by the way. Remember, everything that I showed you so far was mostly on 4-hour charts, talking about like the 4-hour bull flags and stuff like that. Okay, here is the daily time frame when the Fed starts getting ballsy and raising rates. Okay, this lasted 3 months. We've been through 1 month of this. Okay, there are people calling and cheering the bottom, loading the boat at what SPY did in a 2-hour span on Friday. Do not follow those people. Okay, they did not live and trade through this. Now, I'm not nearly as dumb and ignorant as I was back in this time period. Okay, I've learned a lot since then, and I've lost money during this time. But what I can tell you is that people calling the bottom would be the same people cheering this on. Okay, this is an A+ textbook bear flag on the daily time frame. Look what happens. Price leads in lower lows. One pattern leads into another. I've told all of my mentorship groups that One pattern often leads into another. Here's price executing on a bear flag. Look what happens. A short-term bottom is found. A ascending wedge is formed. And it leads to new lows. Another ascending wedge, but uglier, is formed, and we lead to lower lows. Here's another bear flag right here. We lead to lower lows, and the market starts to crater. Okay? Do not listen to people calling a bottom after 2 hours of bullish price action with monster volume. Okay, I went over the bullish thesis in the beginning, and I said it makes sense if this is the volume or if this is the bottom. I showed you the weekly charts. Okay, but to be so definitive about it, no, I'm not going to buy that. I've seen this before time and time again. March of 2020 showed this. Let me go back in time. Okay, I remember watching Fox Business at this point in time. Okay, we're right here around the market. I don't think we hit a limit down yet. Okay, and we're in the beginning of March. SPY prints 290, 300. Okay, it dropped from the high 330s. People are on Fox Business talking about how, well, you got to wonder how many of these amazing blue chip companies are going to be on sale and how much longer this sell-off is really going to last, because a lot of these companies are trading at bargain prices right now. People are going to buy this up. Okay, look what happened. The market eventually did 3 limit downs when they were talking about this being the bottom. Okay, nobody knows for certain what's going to happen, but don't ever be fooled by 2 hours of bullish price action and people are going to call the definitive bottom. I saw it in 2018. I saw it in March of 2020. Watch for them to do the same exact thing. Okay, if Wall Street wants to rug pull retail, they're setting it up really, really well. And Friday's close was the first part. But if they're going to set it up, it's going to last longer than just Friday's close. Okay, they're really going to push the limits, and they're going to try and fool as many people as possible, getting them to think that the bottom is in. All right. Absolutely. Absolutely. All right. If anybody has any questions for me for anything that I've talked about, feel free to ask now, because I've got one more thing to talk about SPY and TripleQs. And then actually 2 more things. And then I'm going to jump into my watch list as far as specific tickers go. And that's it for my watch list meeting tonight. In 2018 was intraday move. Yes. Yes, absolutely. They're going to, I mean, it's volatility. Volatility is back. Okay, volatility is not going away until, I would say, now here's the one good thing. Friday's bullish close, and if so long as the market doesn't gap down tomorrow by like 30 plus points, talking about ES here, as long as ES doesn't gap down by 30 plus points tomorrow, Friday's close and even a gap up tomorrow, it's going to help kill IV. I want there to be low IV because it sucks. It makes it harder for people to trade. Okay, you lose more money. Yes, you stand to make more money, but like all of you small account traders out there, I feel for you. I've been there. I've done that. Okay, it really does make it a lot harder for small account and medium accounts to make money. Okay, because tickers that really weren't that expensive all of a sudden start doubling and tripling and quadrupling in how expensive their option premium was. Okay, SPY IV normally floats around 16 to 20%. Right now, the last few weeks, it's been 30 to 40%. That's really, really high IV. Exactly. Is SPY moving $12 in a day? That's going to drive IV through the roof. So that's the one good thing about the bullish close. Bull or bear, it's going to help kill IV off. Option premiums are going to come back down a little bit. It's not going to go down back to what it was in December and November, though. We're a long, long ways away from that still. But option premiums should come down a little bit starting tomorrow morning again. You should notice a $20 to $30 difference maybe at the most. As far as intraday movement, similar, absolutely. I mean, this is volatility. This is human trading too. Algos are turned off. Let me show you the daily time frame here real quick, because this is where I'm getting in next. See this right here? This monster rally off of the September correction that we saw, because this was a correction. This right here, that's a buy algo that got flipped on for everything, basically. Everything got flipped on with a buy algo. This is the reaction. Notice the difference in volume as well. Okay, notice the higher volume bars. Volatility's back. It's human trading. When human trading is on, you have competing market makers, and you have Wall Street and hedge funds fighting against each other for control of everything, not just the market, but also individual stocks. That brings more volume in because now retail starts getting into the mix as well. When one side gets in dominant control, this is what you see. And in this case, this was a buy algo that got flipped on. Volume bars start to go down. Notice how the volume starts to slip away. Well, it's because buy algos got flipped on. The bulls are in control. This is the monster rally that you see. This is what we will see if bulls are in control again. We will see this kind of buy algo get flipped back on. It's still way too early to tell. It really, really is way too early to tell if this is what we get. But yes, this is very, very similar to 2018 and 2020 to a degree. I mean, 2020 was hella volatile. Now, if we ever get to a limit down, but go long on everything. I mean, I can tell you right now, if we hit a limit down, you have about 10 to 30 seconds of market hours or the market being open before everything's halted. 30 seconds lasted one time. By the third limit down in 2020, if memory serves me right, it was a solid like 3 to 5 seconds. Boom, everything was halted again. Okay. If they halt everything and you have the opportunity to sell, you need to sell in those, you need to lock in those profits now, because that is the most opportune time that option premium is going to be juiced at the max. Once they halt it, premium is going to come back down. And when they unhalt it, if it does the same thing that it did the 3 times in 2020, go long on everything, because everything's going to get a short relief bounce. That's what they did in 2020. I can't guarantee it, but I would think the same thing, and this happens again. The same rules apply. Okay. And for SPY, if we ever see a limit down in SPY, I would think a relief bounce at SPY's current levels would be a $3 to $4 pop to the upside. Okay. So if you miss the limit down, that's fine. Wait for everything to become unhalted. I think a halt lasts 15 minutes. SPY should give a solid relief bounce. If SPY gives a relief bounce post a limit down and becoming unhalted, a $3 to $4 move, that's your day made right there, if you're able to catch that. You will know, because social media will be going crazy. It is a 7% drop. That is the first limit down. There's a possibility of 3 limit downs. 7% drop, followed by, I believe, a 13% drop. I knew the numbers in 2020. I don't know the numbers off the top of my head. 7% drop, it's a 15-minute limit down, or a halt, excuse me. 7% drop, that's a limit down. Markets are halted for 15 minutes. If they hit a 13% drop, which I would think is very, very unlikely, even in these volatile market conditions, and if the Fed raises rates by 0.5% or more, I think that's very unlikely. It's another 15-minute halt. I think the magic number for the third limit down is 20%. If they hit a 20% limit down, the market is done trading for the day. It's done. So if it limits down at 10:30 and it hits 20%, now you're talking about SPY losing 20% of its value in a single day. Think about how big that is. The market is done trading for the entire day. Okay, exactly. There you go. That's how big that is. That's a really earth-shattering Armageddon kind of event for that to happen. Okay, 3 separate 7% limit downs happened. Now, it's funny is futures can limit down and limit up. If futures rip 7% or higher, they hit that 7% mark in the positive, futures are done trading. They limit it up. Same thing for the limit down. During market hours, SPY can run it up 7% in a day. They don't halt the markets as far as I know. I don't believe they halt the markets if SPY rallies 7% or more in a day. To the downside, yes. To the upside, I don't think they halt SPY. I think it's just futures that they halt in either direction. Okay. Oh yeah, from a technical point of view, that I'm going to really light some people up. And I'm not going to name drop because I don't know who they are. I mean, they're just idiots on social media. But the biggest technical resistance out there, if you trade with EMAs, you've taken my mentorship, if you've been in my group long enough, you know I love trading with EMAs. I use them pretty much a day-to-day basis, but I am starting to get away from that. The biggest value of anybody who uses moving averages is 200. Okay, the 200 MA. This is like the oldest textbook moving average in the book that's out there. Okay, a lot of people who don't use moving averages, it really is. That's a good way to put it. This is like the holy grail of moving averages in the market. Here is SPY closing at 441.95. And here is, just so everyone sees it, MA moving average 200. That's the value. And then I have the 9 EMA exponential moving average 9. This is the 200 moving average, basically the holy grail, the benchmark of all moving averages. SPY closed below it. That is still technical resistance. In a perfect world for bulls, they break SPY out above the 200 MA, they break it out, and then price falls back down for a retest to confirm this rock solid, strong technical support, and then they bounce price with a rally. That is the A+ textbook long setup. They break it out, it comes back down for a retest to confirm that support, preferably with volume, and then it rallies. That's the A+ textbook long setup. People calling for a bottom and price still closes below the 200 MA. Again, like, I don't want to call them idiots, but I mean, come on, this is textbook stuff. Okay, so be careful who you listen to. All right, SPY hasn't even reclaimed the 200 MA yet, let alone anything else. All right, TripleQs, put in relation for the TripleQs. Price is $15, $14, $13 away. That's a long ways away. And honestly, being so far away from the 200 S or the 200 MA, that's an easy short setup on the first run up. Okay, I've said that with EMAs. If you've been with me long enough, I've said that on the 55 EMA specifically. If price goes under the 55 EMA, eventually it will go back for the retest to test that resistance. The same rules apply from the 55 EMA to the 200 MA. The first run up to retest that technical resistance, easy short setup. It doesn't happen every time, but it is a high probability short setup for the first go around. The second and third retest, if it even gets to a third one, I can't guarantee. But the first one, I can guarantee that's an easy short setup. There will be the odd that balls out, but it's going to be an easy short setup. So mark that. 365 basically is a 200 MA to watch for that short setup if it comes. All right. So that's to round out my SPY on TripleQ analysis, and this went on for an hour. So that's pretty good. From a technical point of view, bulls have their work cut out for them. On big time frames, prices trading below a lot of key EMAs and MAs, like I just walked through. If SPY bulls can hold above 460 to 463, and I'm talking about in a 2-week stretch, okay, they can hit 460 this week, but what do they do with it? Is there a lot of limit orders that come through? Does volume light up, or does price fade by $5? Okay, bulls can relax, in my opinion, around 460 to 463, and that tees us up to start looking at 478 and 480 as our upside targets for SPY. But you have to get there first and hold those levels. Okay, if bears can keep price below 450, talking about SPY, they can easily flush price back down again. Now, I showed you what happened in 2018. I showed you the small relief bounces. I showed you the bear flag that executed and then led into a bigger ascending wedge that eventually executed and led to new lows. Wall Street, volatility is back. They're going to fuck with retail really hard. They want to take your money. Don't ever forget that. They don't want you to be around. Okay, they don't like you. They don't like retail. They're going to do everything they can to fuck with you. 2 hours of bullish price action and people are calling the bottom. It's got to be longer than that. And you will always have people taking credit and this and that. But this is really eerily similar to 2018. Okay, and not to mention we have stocks trading that make no money at record book valuations. I mean, Rivian, I mean, that thing's a joke. They don't have any cars on the road. And what was their market cap? 150 billion? I mean, that's insanely ridiculous. Tesla coming out with fundamentally bad news today. I posted in the server if anybody read that team. Exactly. Rivian Air car of the year. And wasn't their truck like Motor Trend's truck of the year or something like that? I mean, that's the kind of ridiculous stuff right now that the market is seeing. That's going to go away. Like that is the market's going to take care of that on its own. And I even said this to my team and I put on StockTwits. The trending stocks on StockTwits on Friday, in my opinion, showed me everything I needed to know. It was Hood after a terrible earnings report and a massive guide down by Robinhood. It's the number one trending ticker all day, and it's up by 5%. AFRM, which had a really bad blow dealt to it from Piton, essentially, also trending. And then Piton was green today. I think Piton or Peloton was up 4.5 to 5% on Friday as well. All three of them insanely overvalued. AFRM, that's a little bit debatable, but Hood and Piton being green by 5 and 12% on Friday. No, as long as that happens, and AMC and GME, same thing, they were green on Friday. As long as that happens, and I keep seeing that, in my opinion, the market bottom has not been found, because that is the stuff that the market's going to do away with. The market cleans that out on its own after a certain period of time. People had their fun with them the last 2 years. The market is going to reset itself, and these amazing blue chip A+ quality companies are going to come shining through again. The market's going to do away with that garbage stuff on its own in due time. All right. I'm not going to run through these charts, but I do want to give a list. If you're in my team, I gave you a list. I also want to put this list out loud for everybody to listen to. Now, I said a lot of bearish stuff about the market, but price action doesn't lie. The list that I'm about to run through, all of these stocks printed weekly engulfing candles that were bullish with volume. So when I say with volume, last week's volume bar was bigger than the volume bar of the week before. That is a high probability setup to see continuation into the next week, which is now this week. All right, these companies were Microsoft, DDOG, ExxonMobil, CVX, Oxy, Home Depot, Visa, MasterCard, UNH, and J&J. Okay, all of those companies. Oh, and CVS. Add CVS to that list. So for everybody in my server, CVS is back on watch for me this week. It's been too long since I've traded that. CVS printed a bullish engulfing weekly candle with volume. It's high probability. I think it closed below 110. So 110, that's a big psych level to watch for CVS to print. That might be all-time high territory too, by the way. All right. Now, a lot of charts are broken, in my opinion. I mean, looking back at it in hindsight, I think sellers did start to reach exhaustion levels, and I think that's why we saw the strong close that we did on Friday, just because people are not people, but sellers were kind of reaching like their exhaustion phase. Like they had had their move. It made it easier for bulls and buyers to come back in, buying stuff up and to get in control, in my opinion. Okay, so I think that's why we saw such a drastically strong close on Friday. But again, overall, fundamentally, I'm not even close to being sold on the bottom being in. I think it just made it easier for bulls to come in and to buy a price up. So now I'm going to run through my watch list outside of SPY and TripleQ. And I'm only going to run through 8 names. I'm only watching 8 stocks, so a total of 10, including SPY and the TripleQs this week. All right, I'm keeping my watch list small and concise, but all those weekly stocks that I just named are also on my side list. Basically, I'll watch them for setups. All right, Lucid, Rivian, yeah, Amazon had that's all because of Amazon. I firmly believe Rivian got truck of the year because of Amazon being attached to it, and that was Amazon flexing its muzzle. But that's an argument for another time. So AMD, looking at the hourly chart, okay, and looking at the daily and weekly charts, beside those weekly candles, the daily charts are kind of ugly. I mean, it's a lot of, this is what happens when we get volatility, charts get busted. It takes time for them to come back and to give us like some clear price action levels and all that good stuff. So with that being said, I had to shrink it back down to the hourly and the 4-hour time frame, and that's where I was able to find some better setups to run through. On Friday, buyers defended $100 really, really well for AMD. Here's the kicker. If $100 breaks on AMD this week or in 6 months, price is going back to the $80 range. High 80s, mid 80s, low 80s, I do not know. But if $100 breaks on AMD as support, and that support was validated on Friday, buyers defended it in pre-market and during market hours. Specifically, look at this 2 p.m. hourly candle right here. Price dipped down all the way to 141, and it closed at 106.54. There are people waiting to buy AMD at $100. Okay, If and when that $100 level breaks for AMD, short the thing. It's going to be a big drop. It's probably going to be a solid 5 to 6, maybe even an $8 drop in a day for AMD when that $100 level breaks. That's something to keep an eye on. But for right now, until that happens, play the bounce. Buyers bought this dip. Intraday double bottom. Right now, I think AMD can keep pumping until 110. 2 reasons why. A bounce off 100, huge psych support. Every $5 counts as a big psych level. Price closed above 105. That tees up 110 as the next big psych level. Coincidentally, old support becomes new resistance. Look at this bear flag AMD executed on. Here's the support trend line of the bear flag. Support validated right here. It cut through it on Thursday. Okay, on the first retest of old support, more than likely being new resistance. I can't say for certain yet because we haven't seen that confirmation yet. But look where that resistance trend line is. Coincidentally at 110, which is now psych resistance. Okay, high probability short setup right here for AMD at 110. I would think a rejection at 110 easily leads to a $1, $1.50, $2 drop down to 108. 108, if you short at exactly 109.80 to 110 for an AMD, and if price hits 108, that's a solid $2 drop. Take your profits, move on to the next trade, in my opinion. A break above 110, 112, easy first target from breakout above 110. Oh yeah, 100%. I can definitely see that. But I just don't want to get like too crazy and people start saying I have a bearish bias again. So, but yeah, I mean, I can see what you mean. I definitely see what you mean. All right. Oh shit, Casey said Casey hopped off. All right, ExxonMobil. Oil was red hot last week. And honestly, until this Russia-Ukraine ordeal, I mean, I don't want to say it's a conflict yet because Russia hasn't exactly invaded just yet, even though the warning signs keep growing by the day. Up until this conflict is either resolved or until we get a definitive direction out of that region, oil is going to be a hot commodity. ExxonMobil, bull flagging on the hourly time frame. Here is the bull flag for ExxonMobil. $76 is the key level to get over. Okay, let me look at oil right now. I'm going to pull up oil futures on my phone. Futures are actually like small green right now. ES is up 12 points, so that bodes well for bulls. Oil right now /CL is up $1. That bodes well for ExxonMobil, but oil is very volatile. Here's one thing I can tell you. If Putin backs down and he opts not to invade Ukraine, oil will flush. That is the bull thesis right now for oil, is because of Putin. If Putin caves in, doesn't have a backbone, whatever, he opts not to invade Ukraine, short oil. I really firmly believe that's going to pop this oil bubble that we've built up recently, like the past month or so, because of this hype off of Ukraine and this fear that's been built up. Oil will be nasty, I would think, off of that news. So short oil stocks. If you trade oil, I'm looking to short it myself if that happens. That's a big if, because Putin is he's a one of a kind, in my opinion. Okay. But getting back to stocks, ExxonMobil, clean, easy bull flag on the hourly time frame. Breakout above $76. That's your first price target to the upside. Above 76, every $2 increments is your price target. $78 followed by $80. $80. If price prints $80, same thing that I said with SPY and TripleQs at key levels. Watch the volume bars that come in the 5-minute candles that form at $80. If there's no limit orders waiting to be filled at $80 for ExxonMobil and you're in calls and you're basking in profits because you traded this bull flag breakout, you need to exit, because that sets up price to fall back and you will lose money because no limit orders were waiting to be filled by any market makers at $80. Okay, that's a really easy sign that price is going to fade if no volume comes in at key levels. All right, just exit for profit, wait for a pullback, and then buy back in again for another push up to $80 if you really want to stay trading ExxonMobil. This bull flag and bull setup is invalidated if $74 is lost as support. Notice the buying pressure that stepped up right here on Friday, I believe at the 2 p.m. candle. Okay, at $74 breaks, price can flush easily back down to $72. Bull flag is busted. Long setup is no longer there. Then you can short it, but I would see profit take profit as far as short goes, because $73 can also act as a bounce as well. Little bit of accumulation that we saw at $73. So the short setup is riskier if price gives you that, but the long setup, very, very valid. But watch $76. Okay. Let me see my next ticker, Netflix. I got a little bit of flack on stock twits for this. I really want you all, if you're like into fundamentals and being an investor, and like even if you can't trade this stuff and you find like you're fascinated like I am with the markets, and if you just want to like build a thesis and see if it plays out right, read the earnings reports and then read in particular Netflix's earnings reports. Okay, Netflix said competition is now an issue. For the first time in a very long time, if ever, Netflix has said competition is an issue. Okay. Netflix, big drop off of earnings. Okay. Price is now is painting a very, very nice bear flag. If the market is red, this is my number one short setup that I'm watching. If the market is red, right now, futures are green. Futures don't matter right now. If the market is red, this is my number one short setup, because I want to short the piss out of Netflix, because this thing is a bloated pig in my eyes. It's going to go back to pre-COVID levels. That's 240 to 280. That's $100 that Netflix has still got to go in my book. Roku, same thing. $80 to $100 is my level. That's another $30+ for Roku at a minimum. Netflix is painting a really beautiful bear flag. Here's your flagpole. Every flag needs a flagpole. This right here, this big earnings drop of $100+, that's your flagpole. This bear flag is invalidated with a breakout above 400. Okay, no pattern is ever 100% certain. Okay, please remember that. It can be the sexiest pattern you've ever seen on a chart. It's never 100% certain. Above 400, bull flag's invalidated. Buyers can run price up to 415 to 420. If the markets are green tomorrow and bullish this week, very good chance this bear flag doesn't play out. That's just how it is. But if the markets are red, now we're talking about a high probability setup. Netflix is bear flagging with overall bearish market sentiment. That's a bearish confluence that we have going in our favor. Okay, let me read through my notes here real quick. All right, under 370 is the bear's first target. Below 360, it's good game for bulls. Price can free fall. Price can really free fall all the way down to 340 and then even 320. But if that's happening, either Netflix comes out with another bearish catalyst or the markets are red overall with Netflix. Okay, I don't think we hit 320 if the markets are green, even if Netflix executes on this bear flag. If the markets are red, telling everyone right now, this is my number one setup. Yeah. Is he Bill Ackman? Is that Bill Ackman's thing? Or is Bill Ackman separate? Because Bill Ackman has a very long, or not a very long history, but he has a history of buying into things and then they go down hundreds of dollars after he bought in. And, you know, and then Jim Cramer, of course, tells everyone to buy too. That alone is a sell signal. But, oh, okay, sweet. I did not know that. But my point exactly. Look up Ackman. I've read about him a little bit. He does not have the best glowing history of announcing his entry into a company or a stock, and then it performs very well. Okay, I forget the company, but I believe he bought into one company at $400 some, and then it eventually went to $100. Okay, so just because some big Wall Street honcho comes in and announces that he's buying a stake and he's so happy that he was gifted this opportunity, I mean, think about it from a fundamental point of view. Don't read anything. Don't read fundamentals. Don't read the news about Netflix. Does it really make sense that Netflix, when we know it got its boom from COVID, all of a sudden is still trading at COVID levels when the world is going to start getting back to normal? It just doesn't make any sense. And now the CEO says competition. That's a giant red flag in my eyes. I do not know if that was the company. I do not know. I don't remember off the top of my head, but I was seeing talk of it last week when Bill Ackman made his announcement and people started clowning him. All right, so NVIDIA is my next one that I want to watch this week. All right, so this is pretty similar to SPY and TripleQs, and also AMD as well. Okay, so last week price executed on the bear flag ascending wedge that I have drawn right here. Okay, obviously NVIDIA, it's going to rally with the market. That's what we saw on Friday. Just like SPY and TripleQs, here's NVIDIA rallying into trend line resistance. Okay, old support. We see support. We see a little bit of support, a little bit of a bounce off, and then of course it fades and breaks. Okay, if NVIDIA opens below this trend line tomorrow, or it's trading above it in pre-market and then opens below trend line or this trend line resistance by the time price opens tomorrow or markets open, guess what? Trend line resistance is still there until an hourly candle closes above it. If bears are holding on to this trend line resistance and they are still in control and price rejects on this breakout, this pull up, price is going to print 216 again. Okay, I mean, NVIDIA is going to go back down to 216 if it does not break out right here. Okay, bulls want to see a big breakout right here above this trend line. If they get this resistance to be broken and they pump, it's going to print 240. 240 is the first area of value. Notice the rejection here and notice the rejection here. 240 is your first price target if you are long. If 240 is broken out of and bulls remain in control, market sentiment matches, maybe AMD earnings is the catalyst it needed, here's your second price target right here. And that is right at 248 and change. Okay, see this upper wick right here? From 240, you flip to 248 as your second price target. And I get all of that with no indicators, just pure price action. Okay, can I be wrong? Yes, price can hit 245 like a pancake and then it fades completely. But that is my price target. Once 240 prints, I move to 248. No, I did not mention a contract yet, because if Netflix executes on that bear flag, that's going to be a multi-day movement to the downside. So I might be looking at February monthlies. That's going to be like a large count only kind of trade. But, and of course, day trade opportunities will be there. I mean, that bear flag might execute intraday, and you can short it with weeklies down through the day. What's the exact number? Can you give me a price? Because that's good to know. I did not know that. I didn't slap the 200 MA on anything else but SPY and TripleQs. $22.19. Okay, so price was actually trading below it last week, and buyers maintained it. That's a bullish sign. I'm not going to try and spin that any bearish way. Price was trading below the 200 MA last week, and bulls reclaimed it by Friday's close. That's bullish. All right, that's bullish, but market sentiment flips on a dime. I showed you SPY 200 MA. Let's see how NVIDIA treats that. That's really good to know. I appreciate that. Thank you. All right, I've got 4 more names, and Snapchat is one of them. All right, really interesting setup here from Snapchat. I think this, in my opinion, shows a lot of strength because we know how volatile the market was last week, and we know what a beating some large cap stocks took last week. Look at what Snapchat did last week. It traded in a very, very tight $4 range. Buyers were there, and so were sellers. This is about as clean and easy as a setup that I can give as far as entry for levels go. Really simple. Go long above $32, short below 28. If price breaks out above $32, your price targets are $34 to $35. Okay, and that's where we see an area of value right here. There's a small gap. It looks like about a 40-cent gap from $34.60 to $35. That can be filled at $35. Previous support that we can see a little bit right here. I would expect old resistance at 35. That's going to be a big psych level for Snapchat. This is a great ticker to trade. Premiums move really well. We've traded it before in the team. And if you've got a small account, this is always a good ticker to learn how to trade as well. Okay. If $28 support breaks, look how well it held up. A lot of buying pressure sitting at $28. Short it. I would say price target, my price targets without any indicators, fibs, all that good stuff, $27 to $26. If $27 prints to the downside for Snapchat, see profit, take profit, you call it a $1 drop. That should easily be a 30% gain in profits at a minimum, possibly 40 to 50% at most, I would think. Thinking out loud, just running through Greeks in my head, that's a really good trade to the downside. If you can hit a $1 drop and get 30% profits or more, that's really, really good trade as far as risk versus reward goes. Okay. And if you've got a bigger account and you want to trade this setup and you want to practice position sizing, this is a good ticker to do it on, because Snapchat options, IV is going to be juiced on everything, but Snapchat options, I haven't looked at them yet. They should still be relatively cheap. I definitely would think they are cheaper than SPY and TripleQ options. So put that in perspective, because last week we were trading SPY and TripleQ a lot, and DIA as well. Okay, so just to throw that out there as well. Twitter is my next one. All right, Twitter painting a really, really nice ascending triangle on the hourly time frame. This is probably shown on the daily and 4 hour, but I found it on the hourly. I'm going to keep it on this way. Okay, ascending triangles are a breakout pattern, but no pattern is absolute. They are a breakout pattern because here's your flat line of the resistance, and then price is making higher lows with an ascending triangle. So the trend is up, but you have a flat level of resistance. Eventually, the idea is it bounces off support one last time. Finally, it breaks out. Okay. But I mean, I've seen many instances where it's been an ascending triangle and price just guts right through support and sells off completely. So this is a setup that goes both ways, even though it is a bullish breakout pattern. Okay. Levels for Twitter. I have above 35.50. Your first price target is $37. We see an area of value right here at $37. Previous support, price held $37. It looks like intraday really well right here. And then finally, once it was broken, it led to a $2, even down all the way down to, my goodness, like a $3 to $4 drop. Okay. As far as area of values go, I would expect $37 to be a new supply zone. Old support, now new resistance for Twitter. Okay. But that's still a solid $2 run up, basically, that we can catch. Not exactly, but that's a possible $2 move for Twitter. That's a really, really nice profit that you can make off of that. If price breaks to the downside of this support line of this ascending triangle, the entry is going to get a little tricky. I would see an hourly candle closing below this trend line is your ticket. As far as price values go, $34.50 to $34 is your entry. Price target is $32. So long as price breaks this low right here, and that low is roughly $33.30. From $33.30, and your entry is $34 to $34.50, that's a $1 drop you're looking at right around there. That's a really good risk versus reward kind of trade. You can scale out for profits here. If this low breaks, followed by $33, this low right here becomes your profit target, and that's just above $32. Hence how I got the $32 profit mark. All right. Next ticker is CRM. I'm going to switch it, I think, to the 4 hour time frame now. I'm start getting a little bit bigger. This is my second to last ticker that I'm going to go over. All right, so this is coming at the bottom of a really, really nasty downtrend for CRM. I mean, CRM has taken a really brutal beating. This is a ticker that's weighted in the Dow Jones, but it is a tech stock as well, to keep in mind. The Dow Jones is really diversified, but there's only 30 companies in it, but it's really diversified. This CRM is still a tech stock. Okay, so fundamentally, this is a weaker year for CRM. Okay, this is either two things. In my opinion, I see two things here, and depending on what you show this chart to people, they will probably see one or the other. I see two possibilities. One, this is a bear pennant. Bear pennant is a bearish breakdown pattern. Price chops it up in this pennant for a little bit during a downtrend that eventually leads to new lows. That's one possibility I see. The second possibility is a symmetrical triangle coming at the bottom of a downtrend. The symmetrical triangle is neutral. Price can break out either direction. It is a neutral pattern. Judging by Friday's close, if you want to go the symmetrical triangle route, we're looking to a breakout to the upside. Okay. But this massive downtrend that CRM has been in, that's why I said the possibility of a bear pennant is there as well. Okay. The safe long entry comes with a 4 hour candle closing above $224. If you get that close, my first price target is $232. To the downside, if price breaks below $212, which is now breaking out of this bear pennant or triangle, whichever one you see, my price targets are to the downside 208, followed by 205. Those are my price targets to the downside. Okay. Last but not least is D-Dog. And I'm going to show you the weekly time frame really quick. I talked about this a little while ago with all those weekly candles that stick out. D-Dog, when does D-Dog report earnings? February 10th. That's next week, I believe. So not because this expiration is February 4th. Sounds like next week, thinking out loud in my head. Bullish engulfing candle with volume. Massive volume bar. The entire body of the previous week's candle is engulfed. That's the only thing that needs to be engulfed for a weekly candle, or for any engulfing candle to matter. It's just the body. The wicks are an added bonus, but it's the bodies that need to be engulfed. The wicks are just bonuses. They don't matter. As long as the body is engulfed, it is an engulfing candle. This is a bullish engulfing candle with a really, really nice volume bar to match with it. And I mean really nice. That's why I'm adding this on to my watch list. And then if we look at it on the daily time frame, real quick right here, we've got a clear area of value at 140. Look at all these rejections that come at $140 for D-Dog. Okay, 1, 2, 3, 4 rejections, and price closed $3 under it. Okay, there's the possibility that D-Dog opens below 340. This is my main upside target for this week, besides SPY and TripleQ. So my main bearish ticker is Netflix. That's my number one bearish setup. My main bull setup is D-Dog. And I have no problem swinging either one if market sentiment matches in the corresponding direction that my thesis and my TA or my setups are matching. Netflix is bearish. D-Dog, this is bullish. This is going to be a really, really big breakout for D-Dog if the market matches and holds up with D-Dog at least for a few days. Okay. Weekly bullish engulfing with volume, bigger time frame. Reports earnings on February 2nd. Price is down 40% from its all-time high. That's bear market territory for this individual company. But if price is going to run it up into earnings, a 40% off discount from all-time high, we might start seeing people start to buy back in. That only adds into my long thesis for D-Dog and my long setup. Okay, $140 is a clear area of value. Above 140, price can start sprinting towards $150, where we see some rejections right here. And then if 150 breaks, we flip to 155, which is where we then see more rejections. Okay, notice 155 kind of held support right here. It gave the bounces to the upside. Well, now we see rejections right here. Okay, old support, now new resistance. But first things first, above 140, I flipped to 145, 148, 150 as my intermediate price targets, 150 being overall as my price target, okay? But that is my watch list for this week. So I talked about a lot of stuff. I rambled on some here and there, talked about market sentiment, my kind of 2 ideas. Absolutely, ask away. I talked about the Fed a little bit. I talked about market sentiment going forward, my bullish and bearish thesis for the market in general, and then I jumped into my 8 stocks that I'm watching this week, along with SPY and TripleQ. So those 8 stocks, I posted charts in the main server. They are what I'm watching this week on top of SPY and TripleQ. Charts for SPY and TripleQ will come tomorrow morning once we get gap up or gap down in play. Isn't there still a gap fill that may pull us to 116 daily? Probably. That's almost, let's see. Let me change my cursor. Yeah, that's definitely a possibility. But it looks like 116.42, we'll say. Where did price bottom? 119. So that's only a $3 gap down. Still definitely a big gap for D-Dog as far as it's definitely a large cap stock. But notice where price is right now. It's at 137. Now, if D-Dog gets back down to 120 and below, absolutely, I start looking at that gap fill. But right now at 140, if price is starting to make higher highs, because we see a higher high beginning to form right here off of Friday's daily candle, I'm not so worried about that gap fill right now. Now, if price moves back down lower, say it gives a fat rejection off of 140, and we start moving and we break 130, 125, yeah, that gap fill starts to be back in play again. Yeah, I have time to go over a few more if you have any requests. I know it's getting late for everyone, no matter East Coast or West Coast. So I'll give it about 10 more minutes. I can do until 11:30. Disney. What caused this gap down? Was that Netflix ER? There's no way this was Netflix ER that gap down Disney with it, is it? Or did Disney come out with specific news? Either way, higher lows beginning to form really quickly. That's the first thing that I pick up on. But I mean, market sentiment's going to dictate what happens next for Disney. But I mean, come on. This is really textbook right here. I mean, that's a bear flag. But market sentiment's going to dictate this. Bullish close on Friday. That's a really low volume bar. Wow, I'm shocked. That's a really big drop. Interesting. I read Netflix's report. I don't see them mentioning Disney, so I wonder why Disney reacted the way it did, unless it was really off of that competition remark. Because that would, in theory, mean Disney has competition with Disney Plus, but Disney, whatever. I'm not going to get into that right now. But interesting. Price makes a higher low on Friday. A lot of volume came in on Friday. Disney's volume bar is lacking. I mean, it doesn't even get to the overall bullish bars of buying the dip earlier in the week. This could be a bear flag that executes. Disney is a unique ticker that really sometimes doesn't follow market sentiment all the time. What do we got on the 4 hour? I mean, honestly, you can always say it's just an ascending wedge too. Let's make that chart a little bit better. Yeah, I mean, that's ascending wedge, bear flag, whatever. But if price breaks out above 140, it's all invalidated. And watch for this gap to fill right here. Watch for 146 to 147.22. So that's an easy $1 move off the 4 hour time frame. What is it on the daily? Is it the same thing? I mean, you got gap fills in play now. The 4 hour shows one thing, and then the daily shows another. Say the market really starts ripping, and just say, thinking out loud here, the market bottom is in. Disney can easily fill this gap just off of a sympathy rally, matching the market and rally into earnings. That's just thinking out loud of a possibility that could happen. Bullish engulfing for Disney. Oh, it shows bearish engulfing. And it's going to, unless Disney runs it up $8 tomorrow, it's going to, yeah, Disney's going to print, I think you meant bearish engulfing, but yeah, Disney's going to print bearish engulfing monthly candle. And that's an ugly one. I mean, there's some buying pressure off that clean psych level of 130, but that's overall really ugly. I mean, that really sets it up to yikes. I mean, that's just gross. This is Disney returning to pre-COVID levels. And we're talking about potentially double digits, not even triple digits anymore if Disney returns to pre-COVID levels. This came from Disney Plus right here. That's all Disney Plus and reopenings because Disney World and Disneyland are getting back into business. But damn, if Disney goes back to pre-COVID levels too, I hadn't even thought about that. I didn't group them into that yet. But that's definitely something to think about now too, from an investor standpoint. You got me thinking now, Alex. That's interesting. I might have to do some more DD on Disney. All right, does anybody have any ticker requests? I have 5 more minutes that can be on Zoom. Absolutely, absolutely. Because I do want to get this meeting uploaded tonight as well. Absolutely. Walmart, oh boy. The goofiest stocks to trade. It does not respect TA, in my opinion. We'll start with the daily. Is this chart locked in? It is. 130, solid cycle, or 134, so not even 130. Overall, for being a large cap stock, Walmart has been range bound. Looking at it like this, Alex, Walmart came back down to the support of this massive range from 134. I would say 134 is the bottom of this range, all the way up to 152 as the top. So potentially if you buy leaps right now for Walmart, if you were to buy, I don't even know, February monthlies, definitely the move, because it's at the bottom of this support range. The kicker is earnings, of course, February 17th. So that's 2 Thursdays away. February 18th is monthly option expiration for February. So that's 2 Thursdays away. It's a decent move Walmart can make. You know, Walmart's prone to big moves. We've seen that. 130 sticks all the way up to 146. That's a $10 move in 10 days. So Walmart is prone to it. More than likely needs a catalyst, though, to get there. But yeah, if you're to go long right here at Walmart, Alex, I really like the risk versus reward. I would keep a stop loss at 136, because if 136 breaks, potentially just 135.20 down to 134 or the next stops to the downside. But yeah, the risk to reward to go long right here for Walmart, I think is really, really solid. Yeah, perfect. That's perfect. I like that a lot. Absolutely. Does anybody have any questions for me, tickers or not? Anything that I went over in tonight's Zoom meeting? I don't want to leave anybody confused with anything that I said, because I know I covered a lot of stuff tonight. Futures remain flat. Gold is flat. Everyone was hyping up gold a month ago. Stupid thing's flat right now. Or everyone was hyping up gold a week ago, not a month ago. Absolutely. Absolutely. All right. Well, if there is no questions for me tonight, I'm going to go ahead and wrap up